Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Humph and Brian Burke. And here was our third and final trivia question. It was a martial arts question. What is the name of the weapon called that has two sticks connected by a chain? Guys? Nunchucks. Yeah, I said, well, what's the big deal? It's just a couple of sticks in a chain, right?
Yeah, that's about it.
Mark,
But officer, I just like to keep my sticks together.
Exactly, so don't lose them.
Yeah.
Okay, when we cut to the commercial break, we cut Brian off a little bit. He was talking about shadow inventory.
Well, we were talking about shadow inventory, and during the break, Mark even brought up a good point about what's going on with the foreclosures now and what direction are they headed. Is this shadow inventory going to start appearing? And it reminded me that DataQuick reported that the notice of default filings were 26% higher in the third quarter of this year than in the second quarter, and this is likely to translate to more foreclosure sales in the first quarter of next year.
Thank God.
Yeah, it's finally going to start up again, I think. Most people would probably be surprised to know, actually, that foreclosure sales in Northern California over the last few months have been quite a bit lower than they have been for the last couple of years. And I think lenders are finally refiring their foreclosure engines after spending almost a year looking at their own processes to make sure they're conducting sales properly. So the tap is opening.
Yeah, we've all been hearing about the next tsunami, the next wave of foreclosures, because it is a huge number. I mean, it's
a big number.
It's a big number of houses that are either in foreclosure, as you described, shadow inventory, either in foreclosure or will be in foreclosure because they simply have no equity or negative equity, or they're approaching negative equity, and if prices continue downward next year, it's just going to add to that roll.
Well, yeah, that's true, but there's if you look at the statistics of home ownership in the U.S., the home ownership rate dropped 3%, a little over 3% between 2004 and now. And the U.S. Census Bureau says that for every 1% drop in the U.S. home ownership rate, it creates 1 million new renters. Now, Morgan Stanley just came out with a report saying that they believe that the home ownership rate is going to drop all the way down to 60%. So that's another 6% to go. That's a lot of folks. So you're looking at 3 to 6 million rental households, and that translates to a lot of foreclosures, and all that's coming up here in the next few years.
Well, and it's. I know a lot of real estate investors who are clients of ours, and they're looking forward to having a lot more opportunity to either acquire rental property to hold long term, which is really one of the great plays in this market, and looks to remain so. And so all that inventory, if it doesn't come on the market in some substantial form soon, what it really means is you just got to do the math. It's going to take longer for us to go through this process of transitioning from a homeowner underwater in default to owned by someone else, i.e. a real estate investor, and then rented, most likely to that same person, or at least shuffle it around a little bit where they're renting.
Yeah, something has to give, and we've got to reset loans to a different basis in order for the real estate market to recover. You can say, do you tear the Band-Aid off quickly or do you tear it off slowly? Either way, it's going to hurt, but at least you get the pain over with and just move on.
Well, we hear from listeners now and again about, they write me and they say, Edward, what would your guests or the co-host say when you ask them a question like, if you had X amount of dollars, where would you put your money right now?
Absolutely, in single-family residential real estate right now. I mean, if you look at gold prices, they're at an all-time high. Stock market's volatile. Nobody knows what's going to happen in Europe and how that's going to affect the stock market. But residential property, especially single-family in California, has a few things going for it. One, the asset values are way below where they've been. In fact, prices in some areas are down 75 to 80% right here in California from their peak pricing. That's always a good time to buy low and sell high, right, Mark? I mean, that's
absolutely
that's the way you want to do it. But at the same time that's happening, all of the rental demand from all these foreclosed former homeowners looking for rentals is driving the rents up. So rents are up, prices are down. That equals a real good opportunity to own rental property here in California, where the barriers to entry are extreme and houses are selling at way below the cost to build them.
So Brian, when people come to you and want to invest in your company, because you're doing foreclosure sales of these residential houses, what kind of returns have you historically been able to provide to them?
Well, what's happening right now is, as I mentioned, with the rising rents and the falling prices, we're seeing just cash-on-cash yields in the neighborhood of 10% net on an asset level, which is just huge. I mean, it used to
That's
be,
amazing.
yeah, a long time ago, single family houses was a mom and pop business. The strategy was just, buy the house, try to break even, let the tenants pay off the mortgage, and then retire off the income. But now you can actually get real yield out of rental property, and that's not even counting appreciation. And even though people think prices are going to fall because of the shadow inventory, like I said, houses are selling at 30 to 50% of replacement costs. They have to go up because no one is building anything right now. Residential construction is lower now than at any time since 1945 when records were started to be kept. So we don't even know if they've ever been this low.
And everybody still needs a place to live.
Everybody needs a place to live, of course.
Occupying
Population's
so-and-so
growing.
tent, right?
Yeah, absolutely.
We're nearing the end of the year now, so predictions are starting to come forth for next year, and I found an interesting range here. The National Association of Realtors is predicting that a 4% increase in unit sales next year, and that versus Moody's, they're predicting a 20% increase. That's a pretty big range, and I would tend personally to believe in a potentially double-digit increase in unit sales next year. I think more and more people are going to start realizing that this is the play right now, is to get involved in single-family home residential, either fix and flip or buy, fix and hold.
And not just people, but even institutional capital is looking at this and deciding this is a place to get in.
But
And they're going to
you
try
gotta
to
be pretty
value.
selective because, like in San Francisco, you're not gonna find too much 10%
No, you won't.
cash on cash.
Nope.
Where are you finding 10%?
We're finding that in the markets that our footprint is, and we're in the North Bay, Sonoma, Napa, Solano, Yolo, Sacramento, and all around Sacramento County down the Central Valley. So, we're not finding those in the core markets. You're finding them in slightly outer-lying markets. But, Mark, as you had said earlier, that real estate investors, should be looking at getting into this, and I think there's a couple different ways they can do that. One is to look at what we're doing with our real estate funds, but another way is just to go out and do this on your own. And I know that when I first got started in this business, I used private money to purchase one of my first deals, and it was the only way I could have ever done it way back then. And I think that private money borrowing is going to play a real important role in this recovery and in helping people accumulate this rental property, wouldn't you think?
Oh, absolutely, I agree. I mean, our business has really been growing this year, but just to bring it back to you, Brian, I also like the passive way of investing in real estate, and the returns that you provided to your equity investors through Praxis have just been outstanding. And so if you don't want to deal with tenants and toilets, you should strongly consider contacting a company like Praxis Capital.
Tenants, toilets, and trash. That's
Yes.
right. Nobody
Three
wants to deal
Ts.
with all that.
All right, guys. Here's the thoughts for the day. If a person told you he was a pathological liar, should you believe him? And there is light at the end of every tunnel. Just pray it's not a train.
I don't believe that.
You don't believe that?
Well, are you a passive liar? What was that?
A pathological liar? No, I'm not. I just said if a person told you he was. Okay. And I want to thank my engineer, Hunter Hornstein, for orchestrating this show. And also, next week, we are preempted because of Cal football. Go Bears.
Go Bears.
That's right, but when we return on December 2nd, we're going to have a special guest, Neil Hennessy from Hennessy Funds, one of Morningstar's top-rated funds. You won't want to miss it. Any last words before we cut out here, guys?
Well,
Happy Thanksgiving, everyone.
Happy Thanksgiving. Yeah, we look forward to talking to you after the
Roll
holiday.
on, you Bears.
Thank you, Peter. Okay, tune in on December 2nd to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.